What's up, guys? I'm Nobody Special. And man, we had quite the crypto crash yesterday, didn't we? Bitcoin dropped almost $10,000 at one point. We had something to the tune of $240 billion worth of combined market cap in cryptocurrency was just wiped out last night. Just gone, up in smoke. So what's going on? Well, first off, let me say this. If you're one of those, crypto is going to zero, it's all one big scam, get out while you can, it's worthless, it's air. If that's you, this probably isn't the video for you, okay? Because I am not your crypto perma bear. All right. That being said, there's obviously some very big underlying flaws going on in the cryptocurrency space, and we saw it rear its ugly head yesterday. We're going to talk about some of the things that might explain it, some of the things that are being passed off in the media, some of the things that aren't being talked about, and we're going to get into a little bit of the numbers to try to see what is the more plausible scenario. Now, before we get too far into this, I have to do this, guys. If you wouldn't mind, please smash that like button, subscribe to my channel, hit that notification bell. It would really help me out. It would help this channel to keep growing, and I would be forever in your debt. Now, that said, let's look at some of these numbers. All right, we're going to shrink my big fat melon of a head. And here is the Bitcoin chart. This is going back a couple of days. And man, look at that big price plunge. It all started really right about market open around 9:30 a.m. Eastern time in the U.S. yesterday, and down, 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 and then wham. All right, that big drop down, that's your stop losses getting triggered. That's your margin calls. Now, one of the things that's going on in cryptocurrency right now, because it's very unregulated and it is the Wild West of finance, you've got some of these new apps out there like Bybit and Hooboy, I don't know if I'm saying that right, where they allow you to leverage almost 100x what you deposit in their accounts. Just to give you an idea, you put $1 in their account, they'll let you borrow $100 to buy cryptocurrency. That being said, the margin requirement is if what you buy goes down in value, they liquidate your butt. They sell you out. And that's what we had here. We had the margin calls and we had the stop losses triggered. And then, algorithmic trading took over and some of those dips were bought right back up. But then we stayed down pretty low for the rest of the day, a little bit more of a decline. We've somewhat recovered right now, but still we're, down from a high of about 52,000 that we were trading at on Monday night down. Now we're in 46. So obviously a big dip in Bitcoin, one of the biggest ones we've ever seen, both on a percentage basis and in a nominal value. And Ethereum didn't fare much better. I mean, here we're looking at the Ethereum chart. Again, just wham, slam, all the way down. Stop losses triggered, margin calls. Somebody buys the dip, and then we settle somewhere in between. All right, now, what happened? So let me preface all this by saying I'm not a financial advisor, okay? Don't touch a trade based on what you hear from me. I'm Nobody Special. I want you to do your own research and your own DD and arrive at a decision that's right for you based on your unique situation. So the main story that I'm seeing in the media that's being passed off is this has to do with a botched rollout of Bitcoin in El Salvador. Okay, yesterday was the first official day of Bitcoin being legal tender in El Salvador, and some things didn't go so smooth, right? One of the poorest countries on the earth where you have rampant gang warfare and blood in the streets, one of the highest per capita murder rates. Go figure, rolling out a new currency didn't go perfectly smooth. All right, I think we all could have seen some problems coming. So let's shrink my melon of a head again, and we're going to get into a little bit of what happened in El Salvador. First off was this Chivo wallet that they decided to use. All right, this is the app that was chosen by the government in El Salvador, and under this program, they gave every El Salvadorian a $30 Bitcoin deposit. That was how it was supposed to go. Of course, as soon as they started doing this, the servers could not handle the influx of traffic of all the people downloading the app all at one time, the sudden rush of people into it. Think about the Obamacare websites crashing in the first days of that. All right, so this is not all that big of a surprise that on rollout day, some government app crashes, right? Nobody should be surprised. And they're in the press, they're kind of saying, like, see, this is what happens. Everybody, they messed it up in El Salvador, and that's why the price crashed. But look, if you scroll down, or actually, let's move over a little bit to the next article. And here's why I think this theory is bunk. Look at this first line of this headline. El Salvador bought $21 million of Bitcoin as it becomes the first country to make it legal tender. $21 million. Okay, they bought 400 Bitcoin. Folks, $21 million is not a drop in the bucket when it comes to Bitcoin's market cap. Remember, Bitcoin has over $1 trillion market cap. I believe it's over $1 trillion. After the other day, maybe not. But buying $21 million and then the app crashing as you try to roll it out and distribute it to your citizens, that is not what caused this sell-off in Bitcoin. Okay, it may have shaken the confidence in the El Salvadorian citizens, their confidence in the government's ability to roll out this program and to manage it effectively, which I'm just shocked that a new government program is not running smoothly. I'm shocked. Look, this is my shocked face. You see how shocked I am? Shocked. But that's not going to cause $240 billion of market cap across the whole crypto sphere except Solana from tanking. All right. That is not what happened. All right. So right away, I have to say this theory that the botched El Salvadorian rollout caused the sell-off is just bunk. The numbers don't jive. $21 million doesn't do it. Now, it is possible that you had some whales doing some selling on the news. That's one possible theory, right? You've heard the phrase "buy the rumor, sell the news," and I remember one of my big rookie mistakes in trading that I made years ago was I bought a lot of Disney stock anticipating the rollout of the new Star Wars movie. This was when the first of the sequel movies came out back in, I think it was 2014, 2015. I bought some call options in Disney expecting the box office smash that Star Wars was, and the profits were going to be immense, and that the stock was going to run up. What I didn't anticipate was that there was a lot of people who banked on stupid me making that trade, and then the day Star Wars came out, they dumped their Disney stock, and it tanked, and my call options expired worthless. Okay, that was one of my first forays into options trading, and it did not go well for me. So it's possible you had something like that going on yesterday, that you had some selling on the news. Not that the botched rollout was the driver, just that you had a lot of whales that were planning on dumping their Bitcoin on the day of the rollout. That's plausible. Another plausible scenario is that you have, and this might be a little tinfoil hattish, all right, so take this with a grain of salt, but another possibility is that you have the establishment financial system is on a mission to punish El Salvador as an example, trying to make an example out of them for the next country who's thinking about doing this, right? If things run smoothly for El Salvador and other countries follow suit, well, that's a threat to the establishment banking system, isn't it? They're losing business. And, powerful people do not give up their power willingly or, without a fight. So it's also possible that you have a lot of the big global banks, the IMF, central banks, whatever, large financial institutions are just trying to make this as painful as possible. And there is some evidence that, or at least some of that may be going on, because I want to show you here, we've had a big sell-off in El Salvador's bond market. El Salvador's sovereign debt is being sold off. Well, if you want to punish a country for adopting Bitcoin, one of the things you can do is start dumping its bonds in the open market, which drives the price of the bonds down and the yields up. It makes it more expensive for that country to start borrowing again. It makes it harder for that country to refinance its debt. And El Salvador is a very poor country, and they're very indebted. So somebody is dumping El Salvador's bonds on the open market, making life very difficult for the El Salvadorians. And that came to a fever pitch yesterday. So that's another possible scenario. And, there's obviously some of this going on. I don't know what just happened. That was an ad just popped up. I hate these pop-up ads. But again, I don't see how El Salvador's bond market selling off would cause $240 billion in crypto market cap to evaporate. Now, here's where I'm having a little bit of trouble connecting the dots, but I think this is a more plausible scenario because the numbers are on the same scale as what happened with crypto yesterday. If you follow my channel, you saw my video yesterday I did about the Evergrande collapse in China and how China's real estate market is on the brink of just absolute catastrophe, and there's contagion risks that could spread all over the world. It could very easily spread to the U.S. And that got me thinking about Tether. And apparently I'm not alone in thinking this because I went on some of the Reddit forums and there's not a lot of coverage of this, but there is some theorizing about this, that the collapse in the bond market in China is going to expose Tether. Now, if you don't know what Tether is a stable coin. It was created by the same people who run the Bitfinex exchange. Now, I want to preface by saying the folks who run Bitfinex are some shady characters. A lot of banks won't do any business with them. I think they're registered in the Cayman Islands, conveniently in countries that don't ask a lot of questions and have very lax finance laws, which I guess if you want to build a crypto exchange, you kind of have to go to a place like that because the establishment banking system doesn't want anything to do with crypto. But let's suffice it to say that these are some shady characters that run Tether. Well, Tether is a stable coin where if you want to trade in crypto, first you have to trade your dollars or your other currency for Tethers, and then you can buy crypto with Tethers. It's a token, a stable coin, right? They created their own money for the purpose of trading cryptocurrency. And Tether is huge. Okay, Tether is not just some altcoin that's some little pet project off to the side like a lot of these things you hear about, right? It's not. Tether is huge, okay? There is 68.7 billion Tether in circulation. All right, so Tether by market cap is one of the biggest coins that there is, and it's a stable coin. It's not really a cryptocurrency. And as much as 75% of all cryptocurrency transactions happen in Tether now. All right, exchanges that trade in Tether represent about 75% of all cryptocurrency transactions. Now, there are other stable coins that are on the rise like USDC and other things, and there have been other stable coins that came and went and failed already. But Tether is the single biggest stable coin on the market. And a lot of people have pointed out that all of the big rises in Bitcoin have coincided with large issuances of new Tethers. And there's speculation that these Tethers are not really backed by anything. Now, for years, the folks at Tether insisted that each Tether was backed one for one by US dollars. All right, that was their story for years, right up until they got sued by the Attorney General in New York. And over the course of that lawsuit, it was discovered that something had happened at Bitfinex where they had lost $850 billion somehow, right? It had to deal with some shady bank dealings in Panama, right? Shady Panamanian banks. Okay, now it's getting even more tinfoil hattish here. So when Bitfinex lost $850 billion, they conveniently took a loan from Tether's reserves to fill that hole. Well, the CFO and the CEO of Bitfinex are the same two guys that are the CEO and the CFO of Tether. Convenient, isn't it? When one company loses $850 million, we just borrow it from the other company. And then on the company we borrowed it from, on their books, we just have an IOU for $850 billion for our other company. And we say, look, we're backed. We're 100% backed. Of course, when Elon Musk does it, we call it visionary, right? Elon Musk used his Tesla company to buy his bankrupt Solar City company. And everybody said, oh, Elon Musk is this visionary man. Well, he did the same thing that these shady guys at Tether just did. That's another story. So anyways, Tether was basically forced to settle with the Attorney General in New York. They paid like an $18 million fine. And over the course of that lawsuit, it was revealed that Tether didn't have one-for-one backed dollars, that they had one-for-one backed dollars or equivalent. And the or equivalent includes things like U.S. Treasuries, like precious metals, like commercial paper, and that last one, commercial paper. That's the big asterisk that has people asking questions. Okay? Because not all commercial paper is created equal. And I want to shrink my big fat melon of a head again, and I want to show you guys a couple of articles. All right, so here's the one thing. Tether releases its most detailed reserve report yet. Only 10%. Yep, I'm in the way. Let's move over here. Only 10% in cash deposits. All right, so first of all, Tether has never released an audit. Okay, I want to make this distinction. All right, what they are releasing is what they're calling attestations, which is documents that they sign. They look so official, and they say we attest to this information. All right, an audit is a deep dive forensic accounting by accounting professionals who go into your books. They have no vested interest one way or the other in the outcome, and they determine if your books pass the sniff test. Tether has never done that. Tether has paid accounting firms to come in and produce a document that they say we attest that everything is above board. All right, so it's very different. That's important. So they came out and they said that only 10% of their reserves were actually in cash. Now, keep in mind, every single Tether that is trading right now, right, and Bitcoin is being bought and sold via Tether, is supposed to be backed by $1 in cash, but only 10% is in cash. Well, where's the rest of it? So you have to dig further into the numbers. So here is Tether's report that they issued as a condition of their settlement with the Attorney General of New York. And I want to scroll down a little bit. We're going to skip a lot of this. But here is the important pages, all right? Here's their asset breakdown. Cash and cash equivalents, other short-term deposits, and commercial paper. They say they've got $30.8 billion of commercial paper. All right? $30.8 billion. That is not an insignificant amount of money. Okay, that's almost half of all the tethers that are in existence are backed by commercial paper, and that represents 75% of crypto transactions. So almost half of the whole cryptocurrency market is backed up by this one line, commercial paper and certificates of deposit. And if you scroll down to the next paragraph, here they have the breakdown of it. Now, they swear up and down that all of their commercial paper are rated A1, A2, A3, right? This is all solid, pristine collateral, they're saying. Well, you have to keep in mind that the folks at Tether have proven that their word is rather do over the years. Unfortunately, because they used to say that they were one-for-one backed by actual U.S. dollars. Well, that wasn't true. So now they're saying they're one-for-one backed by U.S. dollars or equivalent, and that the equivalents are at least A1 or A2 rated. Well, that may turn out to not be true either, because the more you look into Tether's reserves and where their commercial paper is, the more questions you have. Shrinking my head again, and I want to point out this article. Now, I'm not aware of the original source of this article, but Wall Street is unaware of Tether's investments in commercial paper. Now, I need you to understand the scale of this here, folks. $30 billion. Now, I realize it's 2021, and these days the number trillion is just thrown around by the government like it's nothing, like free shit for everyone, right? $30 billion is a mind-boggling amount of money. It is huge, all right? $30 billion does not get casually overlooked. Nobody just loses $30 billion, unless you're John Corzine, the former governor of New Jersey. Another story for another day. All right, so the fact that Wall Street is unaware of Tether's investments in commercial paper, and if you read down through this article, it mentions how they've gone to all the big banks and all the big commercial paper vendors, and none of them do business with Tether. No U.S. financial institutions are handling commercial paper for Tether. All right, so here's a quiz for you. Besides the United States, where in the world can you go to get $30 billion of commercial paper? And by commercial paper, I mean basically corporate loans, corporate debt. Where in the world can you get $30 billion? Or can you lend $30 billion? If you answer China, then your head is in the right place. And specifically when, I believe it was the chief attorney for Tether was doing a CNBC interview, this was a couple of weeks ago, he was specifically asked, does your commercial paper come from China? And he did not answer the question. He said, we do not divulge information about the sources of our commercial paper and our commercial paper clients, right? They hid behind this privacy statement, which is baloney, all right? It's baloney. When you are using commercial paper to back up other people's money, there is no privacy obligation to the source of that commercial paper. You actually have an obligation to your clients whose money you're backing up to be transparent about what you're doing with their money. All right. So the fact that Tether is on TV saying we don't divulge the information about our commercial paper clientele, that is BS, folks. They're dodging the question. So it's almost assured, since none of it came from the U.S., it is almost assured that at least some, if not most, of Tether's commercial paper is coming from China. And you remember the story that broke yesterday. There is absolute mayhem developing in the Chinese bond market, and it all centers around their real estate market, and it's starting with this company, Evergrande. China Evergrande is the largest property developer in China, and they're going bankrupt. There's a big question about whether or not the Chinese government is going to bail them out. Right now, it looks like the Chinese government is not going to bail them out, and the yield on this debt right now is like 35%, and it's basically when yield is that high, that's the market saying your principal is not safe if you lend money to this company. So Evergrande is going bankrupt, and I covered in my video yesterday how there's other developers in China that are heading that way also, where their debt is trading at 60 cents on the dollar or 78 cents on the dollar and falling. So all of the commercial debt in China is crashing right now because of Evergrande. There is this contagion risk and this fear running through the Chinese bond market. Well, if you're Tether and your stable coins, your one-for-one US dollar stable coins are backed by commercial paper from China that suddenly is only worth 30 to 60 cents on the dollar, well, guess what? You're not one-for-one backed anymore. Now you've got big problems, because now if there's a sell-off in Bitcoin and people decide they want to get out of cryptocurrency and they want to trade their tethers back for US dollars and get out, well, you can't just go sell your Chinese commercial paper and get face value anymore. Now you don't have enough money to cover all the tethers that are out there. So when you look at $30 billion as evidenced by Tether's own paper, own attestation, is commercial paper, and we have all the U.S. financial institutions are saying it's not from us, then the only other place in the world where you can get that much commercial paper is China. And China's commercial paper is in the process of becoming worthless. It is toilet paper. So Tether has almost 50% of its reserves in a asset that is fast becoming worthless. Now you can start to understand how the token that represents 3/4 of all Bitcoin transactions could potentially be losing half of its value. Well, now you can understand how $240 billion worth of crypto might suddenly vanish overnight. Now, some of you folks who are a little sharper than me, maybe have a little more wrinkles in their brain than I do, could probably get into the market mechanics of how Tether's reserves losing its value could translate into an instant dumping. Honestly, I'm not well versed enough in how these trading platforms function to be able to draw the specific lines connecting the specific dots to where that sell off comes from. And if you are able to describe that, please let me know in the comments. I would love to have you on this channel to hash that out. But I can tell you the El Salvador story does not make sense. It's just not enough money. It could be a little bit of selling the news. It could be a little bit of establishment finance wanting to punish El Salvador as an example for the next country that may want to do that. But to be honest with you, the more I look into it and considering the numbers that are involved, the scale of the sell-off yesterday, I'm leaning towards this problem with the junk bonds and the commercial paper in China stemming from the Evergrande collapse. I think that is the much more likely culprit for what's going on in cryptocurrency. So what does that look like? Honestly, I'm having a hard time hashing this out in my head, because if all this commercial paper in China does become worthless, if you have this massive debt crisis, I mean, they're saying it's the Lehman Brothers moment for China. This could spread globally. That would be a massively deflationary event. All right, it would send the Chinese currency soaring. Now, here's the other thing: a lot of this Chinese commercial paper, a lot of this Chinese debt is denominated in dollars. All right, so when dollars go bad, when loans denominated in dollars go bankrupt and they fail, like Evergrande is, those dollars cease to exist, which increases the value of all the other dollars that are left in circulation. So this could send the Dixie, the dollar index, it could send it skyrocketing, right? We could be looking at a massively deflationary event coming out of China. And if that happens, then every asset class is going to take a haircut. Stocks, cryptos, precious metals, everything, at least right away. If there's a massive deflationary crash, you're going to see everything get sold off along with it. And then once that initial panic is over, like we saw in March, then you're going to see a flight to safety or a flight to quality. And then you're going to see things like U.S. treasuries and gold and silver and possibly Bitcoin again. I don't know, though. But you'll see some of those other assets start to rally. If we do see a widespread, if Tether goes under, Bitcoin is going down, and it's going down hard, and it's going down big. Now, if you know me, you know I'm not worried about short-term Bitcoin price action. It's fun to watch it go up when it's going up, but my investment horizon with cryptocurrency is long term. And I've said it before, and I still stand by it even after the other day. I think by the end of this decade, Bitcoin will be over $1 million US. I honestly believe that. There's two halvings left in this decade, and the Bitcoin price increases by several X every time there's a halving, and there's two more halvings in the 20s. But there have always been these big crashes along the way. And because Bitcoin is this very unregulated space, and it is one of the main draws for cryptocurrency, right, is that the government doesn't have their filthy fingers in it. Well, that's the good thing, the government doesn't have their filthy fingers in it. But the con to that, is that all the crooks come in and they get their filthy fingers in it, all right? So, and when the crooks are not hampered by regulators, they cause problems. That's when you get things like the BitConnect Ponzi scheme that we had 4 or 5 years ago. And it's possible that Tether is something like that. Now, I mean, I can't prove that, right? I don't know that Tether is definitely a scam, but I can tell you there's some really shady stuff going on at Tether. There's some really shady stuff going on there, and they are not a very transparent organization. Just because they tell you how transparent they are does not mean they're transparent. And if they are mixed up in the Chinese commercial paper market, then there's some serious pain on the horizon in cryptocurrency. So what's my approach? Again, not a financial advisor, but my approach, I just continue to dollar cost average into Bitcoin. I continue to mine Ethereum as long as Ethereum is mineable. And I don't watch the prices from day to day, other than for the entertainment value, because my horizon in cryptocurrency is much longer. I don't try to time the markets. I just make regular purchases regardless of the price. By the way, I use an app called Swan for that. It has very low fees and has very good security features. I'll post a link in the description if you want to use that link and check out Swan. If you sign up, you'll get $10 in free Bitcoin. Full disclosure, that is an affiliate link, so I'm just putting that out there. But I do use this service and I stand by it. I've been using it since about February. I've never had any problems. I've been able to pull my coins off of Swan's exchange and put them into my own cold storage without issue. Which, by the way, on that subject, we noticed yesterday a lot of the crypto exchanges showed their true colors, right? A lot of exchanges went down. We had Coinbase was canceling transactions because of volume issues. We had Kraken, Binance, Gemini went down for maintenance. Folks, if you're using one of these exchanges and every time there's price trouble, these exchanges freeze up and they're not available to you, that just goes to show you probably shouldn't be doing business with those exchanges. So keep that in mind. And again, not financial advice, not a financial advisor, but I do not leave my coins on the exchanges, period. All right? I don't trust them. If there is fraud going on in the cryptocurrency space, it's at the exchanges where it's happening. It's at that gateway between the crypto world and the establishment financial system. That's where the fraud is. It's not an indictment of cryptocurrency. It's an indictment of the traditional financial system, in my opinion. But I don't leave my coins on the exchanges because it's not safe. Every day you hear about another hack. If you have a problem, good luck getting a human being on the phone. And then if you ever really do need to sell in a panic, which I don't advocate selling into a panic, but if you're one of the people who tried to sell yesterday, you had a heck of a time getting your trade executed because when you need them, they're not there for you. So it's just something to keep in mind, folks. Be careful who you do business with and understand that the cryptocurrency space is rife with fraud. I'm not saying crypto itself is a scam. I put my own money into Bitcoin and Ethereum, right? I believe in it. But there are scam artists that are targeting, right? I mean, chances are there's going to be some comments on this video that's going to be some kind of crypto scam artist algorithm that just goes through YouTube and trolls videos and then leaves these comments that tries to convince you to buy Bitcoin, which, by the way, I'll never leave a comment with a link for anybody to click on to a WhatsApp or to anything like that, okay? So if you ever see somebody pretending to be me dropping a comment on one of these videos, that ain't me, all right? So just understand there is fraud all over the crypto space, but it's not an indictment of crypto itself, all right? It's an indictment of human beings and our greed. And again, most of the vulnerabilities lies on the exchanges and where crypto interacts with the existing financial system. So that's why I don't leave my coins on the exchange. So anyways, folks, that's all I have. Let me know in the comments, what do you think happened yesterday? Was it the botched El Salvador rollout? Was it the establishment financial system punishing El Salvador, making an example of them? Was it Tether? Was it something else that I'm missing? Let me know. And again, if you're one of those more wrinkle-brained apes than I am, and you're able to describe exactly in detail how the breakdown of Tether's reserves falling apart translates into Bitcoin price selling off, I would love to have you on the channel to talk about that. So something to keep in mind. Folks, I want to thank you for your time. Thank you for coming out and watching this video. I hope you liked it. If you did, please smash that like button, subscribe to my channel, and hit that notification bell. Again, it would really help me out, help my channel to grow, and I'd be forever in your debt. In the meantime, folks, live small and dream big.